Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. It's created exclusively for NMP TV, and it's brought to you by our friends at PRMG, because they are working for your best interest. Inflation, it's here. Finally starting to see some of these reports we told you was coming, and this time the bond market reacted. Now in the past we've gotten some inflation news, it's been rising, but the bond market stayed kind of calm. Well, when you combine this with some Fed tapering and the fact that transitory was probably a big lie, bond market finally starting to say, hey, wait a minute, we have really negative interest rates. When you think about the rate of return that they're getting, and then you subtract from that the rate of inflation, they're actually losing money by investing in bonds. Now, there's no other game in town, so this is where money's been parked. But because it appears that we're in a situation where this inflation is going to be persistent and probably rising, and it is, we told you that once we start seeing comparisons from a year ago that were very low, and that's exactly what we got in the most recent inflation report, that we would start to see some bond market reaction. And we're getting that right now. Now, it's not crazy, but yields are rising, and we've got to be on guard. There's a couple of things to think about here. First of all, refis are already down about 30% from where they were last year. And that means what you've got to do to keep your business up is consider debt consolidation. MBS Highway has the best tool in the world for that. So you'll actually do more refinances and help clients at a much better clip and make a more meaningful difference in their life. But in addition to that, you've got to have the tools on purchases. Now, here's the thing. Purchases, they're only down 4% year over year. Now, inventory is down 13%. Rates are up about a quarter. And home prices are up 18 to 20%. And we're only down 4% on purchases. Now, that's measured by mortgage applications. When you think about the fact that cash buyers have increased their amount of purchases, really, the purchase environment as a whole is about equal to or a little bit more active than where it was last year. That's a Herculean feat. Just shows you the underlying strength in the housing market. That's probably going to continue for a while. Now, if prices continue to go up at a rapid clip and you also now see rates rising, well, certainly something's got to give there. So we think the rate of appreciation definitely slows down. As for rates, let's get back to that. Inflation is certainly going to be a key player in deciding the rate, the range, and the direction of interest rates. And it's not going to change. The upcoming months are going to compare very favorably to seeing higher inflation. What do I mean by that? When you measure inflation, it measures the last 12 months. That's how you get a year-over-year number. But then what you do is when you get the new data, you kick out the 13-month-old data, so you have the most recent 12. The data that has been removed in the recent CPI report causing it to go up so much, and that will continue over the next couple of months, is very, very low. So we're going to be replacing flat inflation readings with hotter inflation readings today. Heck, prices are up. Used cars are up 26% year over year. You could probably sell your used car for more than what you paid for it in many cases. What does this all mean? It means that you have to raise your game right now. It means that with rates going up, it's going to shake out the order takers and elevate the advisors. And if you have MBS Highway, well, then you're an advisor because you have the tools to really help your clients instead of just quoting rates and trying to win on that level. Next week, we do have a lot of housing data, and this will be meaningful because people are going to be trying to knock the housing market in the media. It's up to you to be able to explain that and articulate it as an advisor and understand what's going on and demonstrate with real information and real facts as to why the housing market should remain strong, at least for the next 6 to 12 months, allowing people to gain some appreciation further, other than just the media that's trying to knock it down. You know what to do. Talk to you next week. Bye-bye.
Be sure to click on the link below for your free 30-day MBS Highway trial.